Welcome to this training module on funding strategies for renewable energy projects. I'm Sarah Ferrigo, a consultant at Sinloc, and I will guide you through this training session, which has been developed within the Knowledge Facility Instruments of the EnerCmed project, co-founded by the Interreg Euro-MED. EnerCmed aims to promote the energy transition in port hinterlands through the development of renewable energy communities integrated with nature-based solutions. The main objective of the project is actually to create solutions that can combine the reduction of energy poverty in most marginalized areas with natural-based solutions. Capable of mitigating the heat islands typical of urban areas. The project is being currently implemented across Genoa, Valencia, Novigrad, Pula, Patras, working closely with local authorities and communities. In this context, training, capacity building, and technical assistance are crucial to empower stakeholders and ensure also sustainable results. The objective of these training modules are to provide energy transition promoters with a comprehensive overview of the different available financing opportunities that can support them in the implementation of clean energy transition project, also guaranteeing their long-term sustainability. To this aim, the module provides an in-depth exploration of two main issues. On the one side, we will be dealing with the broad range of financing opportunities to understand advantages and disadvantages of the different types of financial solutions. While on the other side, we will explore the nature of different financing providers in order to understand the different funding sources for clean energy transition projects. As you may know, there exists a wide range of financing schemes available for energy-related initiatives, and each one of them has peculiar characteristics that make it more suitable for specific type of projects. What concerns EU, there is a good geographical coverage which is ensured across the European Union. Some investors are country-based or region-specific, while others are pan-European or even global. Especially for renewable energy sources, Southern Europe countries, that is to say the ones who are touched from the Mediterranean seas, are a significant target for investment in this type of renewables. Also, as far as target investment sectors are concerned, most financial players' investment strategies include a broad spectrum of transition energy target projects. There is also to point out that despite financial operations, current track records are still concentrated mostly on traditional sectors. Their investment policies are evolving, and they are also including some minor and emerging sectors, such as energy storage systems. Generally speaking, there exist two main ways through which a project can be financed, that is to say, equity and debt. In this table, we summarized the main difference between the two instruments. Debt involves borrowing money from lenders, which must be repaid with interest. The most common example of debt are loan or subsidized loans and bonds. In these schemes, the lender has no control over operations. In fact, it remains in the company, but there is the obligation of repayment with interest by a set date in the future. For these characteristics, debt is better suited for short-term or medium-term objectives. While on the other side, equity involves selling ownership stakes in the company to investors, external ones. Investors in this case may have a say in the decision concerning the projects, but there is no obligation of repayment in any form. While on the other side, the ownerships and therefore profits needs to be shared. For these characteristics, the equity schemes is more geared towards long-term goals due to the potential of growth. Loans are the most well-known forms of financing for projects. They can actually be targeting small and large-scale projects, and both private companies and public promoters can access banking lending. There is to say that public entities may find it difficult to access these form of financing because they may find it difficult because of balance restrictions. Also, newborn companies may not obtain banking lending because of their short credit history and current level of solvency. In the EU, for energy projects, some banks offer specific loans, but not always these conditions, especially the ones applied by commercial banks, may be competitive. Project bonds are a financial instrument which consists of bonds issued by companies for the financing of infrastructure projects. Typically, this instrument is addressed to institutional investors, and its repayment depends on the financial fraud that the project is able to ensure. So that entities that can issue project bonds are special purpose vehicle, companies holding a PP contract, or company holding the authorization for the construction of infrastructure related to gas transportations. Small size bonds are specific for companies not listed on the stock exchange, and they are medium long-term bonds, normally intended for the development plans, extraordinary investment, or refinancing. For what concern the equity instrument, investment funds may carry out an institutional investment activity in the medium long-term risk capital of unlisted companies. Especially for infrastructure projects, the investments fund usually invest by increasing capital through the issuance of new shares or by increasing the nominal value of existing share. Apart from equity and debt, of course, exist other categories of funding opportunities that are able to guarantee the mobilization of financial resources for an energy transition project. In the table that is shown here in the slide, you can see the main categories of funding opportunities, which are grants, that is to say, direct financial contribution awarded by way of a donation to third-party beneficiary engaged in activities that serve specific objectives. One of the example is, for example, Next Generation EU funds. Another example is the public-private financing, which are frameworks of cooperation between the public and private sector for the realization or management of big infrastructure projects of public interest. And the most common example of these are public-private partnerships or energy performance contracts. Another category is subsidy, which are tools employed by a government policy designed to incentivize or encourage a particular economic activity by reducing tax burden. These are fiscal incentives, tax deduction, or feed-in tariff. Another financing opportunities is the one provided by technical assistance fund, which support to organization or individuals with the development needs or problems, which are often delivered over an extended period. The most commonly known are the Elena Fund, the EBRD Green Energy Financing Facility. Apart from those, there are a wide range of innovative instruments that are being developed and which are especially designed to attract funding from other public or private investors in areas of policies strong interest, but which are perceived as risky by those investors. And some examples includes basket bonds, green bonds, and crowdfunding. Here we go a little bit deeper in what is the public-private partnership, which is realized through the creation of an ad hoc company named a special purpose vehicle, which is entrusted with the construction and/or management of the work. The municipality normally provide a grant during the construction phase or pay a fee during the management phase. At the end of the concession, the asset is fully utilized by the public body. Another public-private scheme is the energy performance contract, in which a supplier, namely an energy service company, an ESCO, provides a range of services aimed at improving the energy efficiency of real estate assets owned by the municipality or the beneficiary. The beneficiary pays a rent to the ESCO, which includes an energy efficiency component and the management and maintenance component, which are here depicted and explained in the slide. This approach is very practical and effective in the case an ESCO has a deep and advanced technical expertise that can guarantee achievement of the best results and highest energy savings. To do so, it must suggest the most profitable technologies to the client and takes all the implementation and maintenance responsibilities. Again, here we have the tax incentives or deduction that we explained above. So tax deduction means an amount that can be subtracted from a tax to legally reduce the amount due. In this financing model scheme, a discount is applied on the invoice by the contractor, and the same time the beneficiary of the works transfer the tax incentives to the contractor. Generally, these incentives is collected from the beneficiary in a period from 5 to 10 years. Crowdfunding is a financing practice that involves collecting money from a large number of private investors, normally done via online platforms, to fund specific projects. So in this case, both individuals and professional investors can apply, and the money, which are actually low amounts, is transferred through an online platform and raised against a specific project. Crowdfunding can play a really significant role at the start of a sustainable energy project's life cycle, and specifically in the development of energy communities. Apart from different type of schemes, there is also another major difference for what concerns the funding sources, that is the one between public and private financing providers. It is important to note that normally the sustainability of a project is guaranteed by a sound mix among own resources, private resources, and public ones. Starting from the public providers, the pure ones, the ones which are actually named as pure, concern European funds managed by the EU directly or co-managed by member states, national funds managed again directly or through national promotional banks, and local funds. It is important to note that public finance alone may not be sufficient to cover all necessary investments to achieve the renovation targets. but it plays an essential role in catalyzing private sector investments. So it's even more important to ensure support for the development of projects and initiatives benefiting specific categories such as vulnerable households. Another public source of funding are the international financial institutions. And the two major examples in the European framework are the European Investment Bank and the European Bank for Reconstruction and Development. But we also have national and local promotional banks through Europe. For what concerns the private sector, we have the major category of commercial banks which usually do not offer products specifically tailored for energy efficiency investments. But in some cases, banks have offered lower interest rate on personal loan and mortgages to buy energy efficient houses, for example. And in some cases, they act as intermediaries or partners between the EU or national funds and the final beneficiaries. For example, in the energy sectors, they are involved in the management of the private finance for energy efficiencies and the green energy financial facility. Another category concerns the investment funds, which are interested in the energy transitions and which are normally infrastructure funds. Typically, these investors seek stable returns over a long-term time horizon, but in terms of project type, development stage, and geography of the investment, they are also very different one from another. Another category that we already explained above concerned the crowdfunding platform, in which financing is usually processed through internet platforms using the fintech model. And the aim of crowdfunding is to develop community projects through capital provided by private citizens that will directly benefit not only from the financial returns of the initiatives, but also from its positive externalities. Here we reported a practical example of maybe the most known funding resources for energy transition projects. So the European Local Energy Assistance named ELENA, which consists in large-scale technical system resources to develop projects which has already been identified as needing dedicated expertise for the structuring. ELENA in particular supports public and private entities by offering these technical assistance grants that cover up to 90% of a project's preparation costs. Unlike many other EU programs, there is no submission deadline for ELENA grant proposals, and the technical assistance involves a broad range of activities which spans from technical studies, energy audits, business planning, assessing financing options, applying for project financing, and so forth and so forth, in three main sectors, so residential sector, energy efficiency, and sustainable transport. As a conclusion, we can say that developing ways to secure financial resources for energy transition projects is essential for effective resource mobilization and allocation from both a private and public point of view. In fact, one of the main economic barriers to the realization of projects is actually the lack of funding to complement already available resources and or to cover the total investment required. So by ensuring sufficient financial resources, funding helps mitigate risk, scale up solutions, and allow for long-term sustainability. Also, in order to choose the best funding schemes according to the specific characteristic of the initiative, a clear overview of the broad range of typical schemes for energy transition project is the starting and the fundamental point. So thanks a lot for following this training session. I strongly invite you to explore the EnerCmed knowledge sharing platform by scanning the QR code here on the screen, and there you will find a range of resources on the technical, economic, and environmental aspect of developing energy transition projects in Mediterranean areas. Thanks a lot for your attention.